Welcome back to our robust finance channel. This video is centered on investment strategies. Have you ever wondered what the best investment strategy in the world might be? It's the million-dollar question, isn't it? The one that could potentially transform your financial future, opening up a world of opportunities and financial freedom. But like most things in life, there's no one-size-fits-all answer. Investment strategies are not just about making money. They're about making your money work for you, growing your wealth, and securing your financial future. They're the roadmap to your financial success, guiding your decisions and helping you navigate the often complex and volatile world of investing. Now, imagine you're standing in front of a buffet, a smorgasbord of investment strategies, each with its own set of potential rewards and risks. There's the conservative approach, favoring bonds and blue-chip stocks. There's the aggressive growth strategy, with a preference for high-risk, high-reward investments. There's the balanced approach, a blend of cautious and bold moves. And that's just scratching the surface. In the world of investing, variety isn't just the spice of life, it's an essential ingredient in the recipe for financial success. Different strategies cater to different goals, risk tolerances, and time horizons. It's about finding the strategy that fits you like a glove, aligning with your financial goals and comfort with risk. But here's the thing. No matter what strategy you choose, it's not set in stone. It's a living, breathing entity that should evolve with you as your life circumstances, goals, and risk tolerance change. It's not about finding the perfect strategy because, let's face it, there's no such thing. It's about finding the right strategy for you right now. So, are you ready to embark on this journey? To explore the landscape of investment strategies, understanding their nuances, and discovering which one might be your perfect fit. Stay tuned as we uncover the secrets of the world's most successful investment strategies. Diversification, often considered the only free lunch in investing, what does it really mean? Well, let's dig into it. Diversification, in the simplest terms, is the spreading of investments across a variety of assets to reduce exposure to any one particular asset. It's akin to the age-old wisdom of not putting all your eggs in one basket. In the world of finance, this strategy is a risk management technique that mixes a wide variety of investments within a portfolio. Why is it important, you ask? Well, it's all about balance. Imagine walking on a tightrope. Would you rather have a single heavy weight on one side, or a balanced distribution of weights on both sides? The latter, right? That's what diversification does to your portfolio. It balances the risks and potential rewards, ensuring that the failure of one investment doesn't bring down your entire portfolio. So how can we achieve diversification? The answer lies in the variety of assets available in the market. These can be broadly classified into four types: stocks, bonds, real estate, and commodities. Stocks represent ownership in a company and a claim on part of the company's assets and earnings. Bonds, on the other hand, are essentially loans made by investors to the issuer, usually a corporation or government agency. Real estate investments involve purchasing properties for rental income, appreciation, or for use in a business. Finally, commodities include physical assets like gold, oil, natural gas, or agricultural products. Each of these assets behaves differently under various economic conditions. For instance, when the stock market is booming, bonds might not perform as well. Similarly, when real estate is thriving, commodities might be lagging. By including a mix of these assets in your portfolio, you can ensure that even if one asset class underperforms, the others can potentially make up for it. In essence, diversification is all about playing it smart and safe. It's about understanding that the market is unpredictable and preparing for it. So, remember, don't put all your eggs in one basket. Diversify. Buy and hold, an investment strategy used by the legendary Warren Buffett. But is it right for you? Let's break it down. At its core, the buy and hold strategy is about purchasing stocks or other investments and holding onto them for an extended period, regardless of market fluctuations. It's a long-term play, a marathon, not a sprint. Now, why would anyone opt for this strategy? Well, history has shown that despite the ups and downs, the general trend of the stock market is upward. So if you purchase a broad array of stocks and hold onto them for a long time, chances are you'll reap some pretty impressive rewards. But it's not just about the potential for high returns. The buy and hold strategy also offers several other benefits. For one, it's straightforward. You don't need to be a Wall Street wizard or a financial guru to understand it. Plus, it's cost-effective. With fewer transactions, you'll generally incur lower fees than with more active trading strategies. But just like any investment strategy, buy and hold isn't without its drawbacks. It requires a great deal of patience and a strong stomach to weather market volatility. It's not for the faint-hearted who panic at the first sign of a market downturn. Moreover, this strategy is predicated on the belief that over the long term, the market will always go up. And while history tends to support this belief, there's no guarantee that past performance will predict future results. So, is the buy and hold strategy right for you? Well, that depends on your financial goals, your risk tolerance, and your patience. But remember, one size doesn't fit all. What works for Warren Buffett might not work for you. It's always wise to consider a mix of investment strategies tailored to your unique situation. And no matter what strategy you choose, the key is to stay informed, stay patient, and stay the course. So if you're a patient investor, buy and hold could be your winning strategy. Before we dive into the exciting world of trend following, let's talk about something equally important: risk management. A solid risk management strategy is like a safety net. It's what protects you when the high-wire act of investing gets risky. It's about understanding the risks you're taking, setting limits on potential losses, and making sure you're not putting all your eggs in one basket. Now, you might be wondering, how does one manage risk? Well, it starts with diversification, which we've already discussed, but it also involves setting stop-loss orders, a tool that allows you to specify the price at which you want to sell a stock if its price starts to fall. This way, you can limit your potential losses. Another key component of risk management is position sizing, which is about determining how much of a particular asset to buy. The idea here is to balance the potential for profit with the risk of loss. Remember, investing is not just about making profits, it's also about protecting what you already have. So always be aware of your risk tolerance and never invest more than you can afford to lose. And remember, the market is unpredictable. Even the best-laid plans can go awry. That's why it's important to regularly review and adjust your risk management strategy as needed. Because in the end, it's not about how much you make, but how much you keep that matters. Before we move on to our next strategy, if you're enjoying this video, don't forget to like, share, and subscribe for more great content. Riding the wave or following the trend, does it really pay off? Let's dive into the world of trend-following strategy, a popular approach that can be both exciting and rewarding. But what does it mean to follow a trend? In the financial market, a trend is a direction in which the price of an asset or the market itself is moving. It could be upwards, downwards, or sideways. A trend-following strategy is about identifying these trends and making investments accordingly. It's like catching a wave and riding it until it breaks. Now, how do we identify these trends? There are several tools and techniques, but the most common one is technical analysis. It involves studying past market data, primarily price and volume, to predict future market behavior. This could involve looking at charts and using various indicators to understand the direction and strength of a trend. But here's the catch: identifying a trend is just the first step. The real challenge lies in having the discipline to stick to your strategy. This means resisting the urge to jump ship at the first sign of a market downturn or getting too greedy when things are going well. It's about staying the course, even when the seas get a little rough. So, what are the potential risks and rewards? Well, the biggest risk is that trends can reverse unexpectedly. This could lead to losses, especially if you're not prepared to adapt quickly. But on the flip side, the rewards can be substantial. If you're able to identify and ride a strong trend, you could see significant returns on your investment. So, is trend following right for you? That depends on your risk tolerance, investment goals, and level of discipline. But one thing's for sure, it's an approach that's worth considering, especially if you're looking for a more active and potentially rewarding investment strategy. Remember, trends are your friends until they're not. So always keep an eye on the horizon, stay disciplined, and be ready to switch gears when the trend changes. So, what have we learned about the world's best investment strategies? We've traversed the financial landscape, exploring different investment strategies, their strengths, and their potential pitfalls. We've learned that there is no one-size-fits-all strategy when it comes to investing. The most successful investors are those who understand that the best strategy is a personalized one. We started with the million-dollar question, highlighting the importance of understanding your financial goals. Whether you're saving for retirement, a new home, or a college fund, your goals will guide your investment strategy. They act as the compass to navigate the financial markets, helping you make informed decisions about where to place your investments. From there, we delved into the power of diversification, a strategy that helps mitigate risk by spreading investments across a variety of financial instruments, sectors, and geographical regions. Diversification is like a safety net. It won't prevent a fall, but it can lessen the impact. Then we explored the buy and hold strategy, a long-term investment approach that involves purchasing stocks or other securities and holding on to them for a long period. This strategy is based on the belief that in the long run, financial markets give a good rate of return despite periods of volatility or decline. Next, we stepped into the world of trend following, a strategy that aims to capitalize on market trends. It's like riding a wave. You catch it at the right time and ride it for as long as it lasts. But remember, timing is crucial. All these strategies have their merits, but the crucial element is aligning them with your personal financial goals, risk tolerance, and investment horizon. A strategy that works for one person may not work for another because we all have different financial situations and goals. So as we wrap up, remember this. In the end, the best investment strategy is one that aligns with your own goals and risk tolerance. It's your money. Invest it wisely. Please note that the strategies we have outlined here are not foolproof and should not stop you from getting financial advice from experts and your financial advisor. Before we wrap things up for today, let's not forget why we're all here. Investing can be daunting. It's a world full of uncertainty, risks, and challenges. But remember, it's also a world full of opportunities. It's a journey, not a destination. And like any journey, it's always better when we travel together. That's why we're so grateful to have you on this journey with us. We hope you found this video helpful. If you have, don't forget to give it a thumbs up and share it with your friends. The more we share, the more we learn. And if you haven't done so already, make sure to subscribe to our channel. We've got plenty more investment insights and strategies to share with you in the coming weeks, and we'd love to hear from you too. If you have any questions, or if there's a topic you'd like us to cover in a future video, leave a comment below. We read every single one. And remember, investing isn't just about making money, it's about creating a better future for ourselves and for those we care about. So let's keep learning, keep investing, and keep growing together. Thanks for watching, and we'll see you in the next video.